Hi, this is Zak Mir with the Bulletin Board Heroes here at Zaks Traders Cafe for Wednesday, the 11th of September. Starting with the FTSE 100, which looks as though it's in a mid-move consolidation ahead of a move to the downside, presumably with all the rich people leaving by the end of next month. There's not many people to buy stock. Floor of the channel there at 80.50, let's say, and an end-of-day close below recent 81.65 support could give us that destination. And we've already got that RSI failure at neutral 50, which is tends to be a leading indicator on the downside. So at this stage, only a proper end-of-day close back above the 50-day line, still rising at 82.36, would get the FTSE out of jail. Moving along to the DAX, and here picture not too dissimilar to that of the FTSE, in the sense that we've got the 50-day line there around 18,300. Below that, we've got the risk of a move to the floor of that falling trend channel from April, and the 200-day moving average at 17,800. Only back above recent, basically only back above the top of the channel there, 18,600, really getting rid of the negative pattern, especially after the bull trap and gap down, unfilled gap down that we've had since the beginning of the month. On to the Dow. It'll be interesting to see if it's how it reacts to the presidential candidate debate. But in the meantime, we've got this market trading either side of that formerly broken July resistance line, 40,700. Below that, there's a risk, obviously, of the 50-day line, 40,200. And if we follow the pattern of the other two markets, as low as 39,300, and the floor of that rising trend channel from this time last year. The fig leaf of hope is provided by the way the RSI is still back above the neutral 50 level, so we're down, but we're not quite out there, especially while we're above the rising 50-day line. Moving on to Bitcoin, which has made some attempts to refurbish itself technically over the recent days, but still the struggle is, I suppose, 60,000 and the 50-day line at 60,400. Below that, we still have the possibility of a move down to the floor of that falling trend channel from February at 52,200, hoping for nothing worse than that. But you can see we also had another RSI failure at neutral 50. That's the second time this month that we've done that. And that kind of signal is normally not wrong. Moving on to gold, and this has been the star of the show and continues to be the star of the show. Nice consolidation above the initial August resistance around 25.24, and above that on an end-of-day close basis, looking for the top of that rising trend channel from December. We could still hit that by the end of this month, looking quite encouraging, especially with the multiple support points since early July above a rising 50-day line. Another bounce for the RSI above neutral 50, 57, so that's right in the box seat in terms of looking good. Moving along to the stocks, and there's hardly any, which is probably one of the lowest contender days I've seen in a long time. Rising trend channel there on Anpario, which stock was hardly anybody's heard of anyway. Here we've got a gap through the 50-day line there at £2.88. Above that, we're looking for £3.60, and the top of that rising trend channel from February by the end of this month. But the key here, holding above that 50-day line. I interviewed Angus Energy last week, and it looks as though the shares are starting to regroup from that particular event. What we want to see here are end-of-day closes above recent resistance at 0.28. That could give us a best-case scenario target, at least in the next few weeks, up to the 200-day line, 0.38, which is where the shares failed back in May. Obviously, no new lows are required there or wanted. Onto a stock which even I haven't heard of, Bivictrix or Bivictrix, and here a broadening triangle base there from November. Obviously, it's not the most liquid stock in town, but just thought I'd give it a mention anyway, just in case we get lucky with this one. 13.5 pence, the level of the top of the triangle there, and we're looking for that while there's an end-of-day close, or while we're above the floor of the gap there from last month at 9.25 pence. Maybe some people are desperate to trade that situation. On to Deliveroo, and here interesting, and we've looked at it before, but interesting that we had a bear trap gap reversal last month. We've had a gap close by signal, and we've had a gap through recent resistance. £1.60, the top of that rising trend channel from this time last year, but there's an upper parallel to that rising trend channel, and that's heading towards £1.95, which we might hit by the end of next month. Ideally, there's no end-of-day close back below the top of the gap at £1.58. Onto a stock which had a decent rise recently, Symphony Environmental. Interesting to see that we're still holding above the 200-day moving average at 3.1 pence. Above that, looking for as high as 6.5 pence, maybe for October, November time. But obviously we don't want to see the shares back below the floor of the channel there at 2.5 pence. Finishing off with TM1, otherwise known as Technology Minerals, and here extended bear run, but hoping against hope that this time the shares can at least deliver an intermediate rally up to 0.4 pence with an end-of-day close above the 50-day line at 0.25. We haven't been above the 50-day line since, properly since the beginning of April, but you can see actually the 200-day moving average there is the main block on progress, so let's see how we go there. That's it from me today. More updates tomorrow.